Welcome to Introduction to Accounting, the language of business, made simple. Accounting is a systematic process of recording, classifying, summarizing, and interpreting financial information. It delivers essential information for decision-making. That is why accounting is called the language of business. First, it provides financial information to stakeholders. Second, it ensures legal compliance with financial regulations. Third, it supports business decisions through accurate data. Financial accounting prepares financial statements for external use. Managerial accounting helps plan and control inside the business. Tax accounting ensures compliance with tax laws. Auditing examines the accuracy of financial records. Entity concept: the business is separate from the owner. Going concern: we assume the business will continue operating. Matching principle: match revenues with related expenses. Accrual basis: record revenues and expenses when incurred, not when cash moves. Track income and expenses accurately every day. Monitor cash flow and profitability. Prepare budgets and forecasts you can trust. Ensure accurate payroll and tax compliance. Accounting provides a framework to track transactions. It enables analysis of financial performance. It supports strategic planning and forecasting. Use data to evaluate cost-cutting and investment opportunities. Set goals and measure performance with clarity. Follow standards like GAAP and IFRS. Maintain records for audits and taxes. Internal controls create checks and balances. Controls reduce errors, deter fraud, and improve governance. External reporting informs investors, creditors, and regulators. Financial statements present business health and performance, building trust. Transparent reporting promotes confidence and access to capital. Clarity, compliance, confidence. Users fall into internal and external groups, each with unique needs. Management uses accounting for planning, budgeting, and performance evaluation. Employees look for job security, compensation, and company health. Owners assess return on investment. Investors analyze profitability and growth potential. Creditors assess creditworthiness and liquidity. Regulators ensure compliance with laws and standards. The income statement shows revenues, expenses, and profit. The balance sheet reports assets, liabilities, and equity. The cash flow statement shows cash in and out across activities. Together, these statements communicate business performance and health. Good accounting improves operational efficiency. It enhances decision-making capability. It builds stakeholder confidence and trust. Ethics matters. Integrity and transparency protect stakeholders. Ethical accounting prevents manipulation and fraud. Automation reduces errors and speeds routine tasks. Software like QuickBooks, SAP, and Oracle streamlines workflows. Cloud accounting provides real-time access anywhere. Modern tools elevate analysis and forecasting. Accounting records, reports, and interprets financial data. It supports compliance, decision-making, and transparency. It serves both internal and external users of information. Why is accounting called the language of business? How does accounting support internal decision-making? Who outside the business uses accounting information, and why? Ready to go deeper into financial statements and analysis? Subscribe, hit the bell, and download the free accounting starter kit in the description. Thank you for watching.